The doors are locking. The vault is empty. The paper reality you've been sold for 50 years is currently disintegrating in real time, and most people are too distracted by the headlines to see the math. I am your host, and you are watching Analysis with AG. What I am about to show you today is not a market update. It is a forensic investigation into a system that has finally reached its breaking point. We are witnessing the great divorce, the moment where the physical price of metal and the paper price on a screen go their separate ways, never to meet again. It has begun. While you were sleeping, silver just erased a coordinated slam attempt and ripped past $88. Gold is sitting at $5,200, up a staggering $140 in a single trading session. But those numbers, as explosive as they are not what should scare you. What should scare you is a piece of data I uncovered while digging through the Chinese industrial sector this morning. China's largest silver recycler, a massive entity called RTN Gold, is currently paying $96 an ounce for scrap. Let that sink in. They aren't paying $96 for pristine .999 fine investment grade bars. They're paying $96 for used, melted down, recycled garbage silver. They're paying an $8 premium over the global spot price just to get their hands on industrial waste. This is not a glitch. This is not a typo. This is a signal that the physical shortage has reached a terminal phase. China's futures exchange has been closed for the new year. It reopens tomorrow. If the recyclers are already paying $96 for junk, what do you think happens when the real institutional buyers step onto the floor in Shanghai? I'll tell you what happens. The world realizes the cupboard is bare. We are heading to $100 silver, and it is going to happen with a violence that will leave the mainstream analysts breathless. But before we look forward, we have to look at the war zone that was the last 12 hours. The price action today tells you exactly where the power lies. Silver opened at $84. Within hours, the old guard tried their favorite trick. A massive sell order hit the futures market, a classic slam designed to trigger stop losses and shake out weak hands. They pushed it down toward 85. In the old world, that would have worked. The price would have collapsed, the momentum would have died, and the banks would have covered their shorts. But we don't live in that world anymore. The dip didn't just fail, it was devoured. Silver ripped from 85 to 88 in a matter of minutes. That wasn't a bounce. That was a message. Every time the paper market tries to suppress the price, physical buyers step in and say, "No, we will take it all." The paper market is trying to maintain an illusion, but the physical market is now in total control. Real buyers with real currency are demanding real metal, and they are doing it at any price. If you are new to this channel, you need to understand that what we do here is data-driven. We don't care about narratives. We care about mathematics. We care about mathematics. Hit the subscribe button and like this video right now. The algorithm is designed to bury this type of forensic analysis because it challenges the "everything is fine" narrative. By engaging, you are helping push this truth to the people who need to hear it before the doors lock for good. Let's look at the COMEX. The numbers coming out of the New York vaults are becoming impossible to ignore. On Friday alone, 6 new silver delivery notices were issued. That brings the month-to-date total for February to nearly 23.5 million ounces. 23.5 million ounces of silver have been called for physical delivery in a single month. To put that in perspective, that is more silver than many major mines produce in an entire year, all being pulled out of the system in 4 weeks. We are now just 3 trading days away from the March 1st notice day. In the world of precious metals, March is a major delivery month. It is the moment of truth. The open interest in March contracts is gargantuan. If even a tiny fraction of those contract holders demand the physical metal instead of settling for cash or rolling their positions over, the COMEX is finished. There isn't enough silver in the registered category to satisfy that demand. I looked at the names of those taking delivery on Friday. It wasn't retail speculators. It was HSBC, it was JP Morgan, it was ADM. When the biggest bullion banks in the world are demanding physical delivery at $88 an ounce, they aren't doing it for fun. They're doing it because they know the paper is worthless. They are front-running the collapse of their own system. I'll be honest with you. Months ago, I thought the silver squeeze narrative was perhaps a bit overblown. I saw the people on social media screaming about vaults draining, and I thought they were seeing patterns where none existed. I was wrong. I am man enough to admit that the data has proven the silver buds right. The drain is real, it is accelerating, and it is mathematical. When you have hundreds of millions of ounces of paper promises and only a few million ounces of physical metal available for delivery, the outcome is binary. Either the price goes to infinity or the exchange defaults. We are watching the price adjustment happen now. But the real earthquake is happening in the East. That $96 scrap price in China is the most important number in the world right now. Think about the mechanics of a recycler. Their job is to buy low, process, and sell high. If they are buying scrap at 96, it means their end users, the solar panel manufacturers, the electronics giants, the military contractors, are willing to pay even more. It means the spot price you see on your phone is a lie. It is a ghost. In the real world, where things are actually manufactured, silver is already a $96 asset. And remember, China has reclassified silver as a strategic material. As of January 1st, they treated it with the same level of national security importance as rare earth minerals. They wiped out hundreds of small exporters by requiring massive refining capacities and $30 million credit lines just to get a license. Only 44 companies in the entire country can now legally export silver. China controls 70% of the world's refined silver exports. By restricting the flow and paying massive premiums domestically, they are effectively building a wall around their silver supply. They are telling the West, you can keep your paper contracts. We are keeping the metal. This connects directly to the chaos coming out of Washington. President Trump just issued what I can only call a rage tweet, and it has sent shockwaves through the global trade system. He threatened any country playing games with higher tariffs and worse. This was a direct response to the European Parliament freezing the Turnberry Agreement. For those who aren't following the minutiae of trade law, the Turnberry Agreement was supposed to be the bedrock of US-EU trade, setting a 15% floor on tariffs. Now, that deal is on ice. The EU is panicking because of the recent Supreme Court ruling that challenged the legal framework of these tariffs. The chairman of the EU Trade Committee called it pure customs chaos. Think about that phrase, chaos. When the two largest trading blocs on Earth are in a state of pure chaos, where does the money go? It doesn't go into the euro. It doesn't go into treasury bonds. It goes into the only assets that don't have counterparty risk. Gold and silver. Trump isn't backing down. He's doubling down. He is hitting harder because he lost in court. Every escalation in this trade war is a massive green candle for precious metals. If you were a central bank manager in Europe, and you see the President of the United States threatening worse than tariffs on social media, you don't wait for a diplomatic solution. You buy gold. You buy it today, you buy it tomorrow, and you buy it until your vaults are full. This is the perfect storm. We have a physical supply crunch in the COMEX, a massive price premium in China, and a total breakdown of the global trade order. These aren't four separate stories. They are one story. It is the story of the end of the paper era. Silver is at $88 as I record this. The next major technical hurdle is 92. We touched that level briefly in January before pullback. If we close above 92, there is nothing left to stop the run to 100. There's no trading base between 92 and 100 because the move in January was so fast. It's a vacuum. And with Shanghai reopening tomorrow, that vacuum is likely to be filled by a massive gap up. My expectation is that the Chinese market opens at $95 or higher. If that happens, the arbitrage is broken. Traders will buy in London and New York at 88 and try to sell in Shanghai at 95. But they won't find any physical metal to buy. The ask price in the West will have to instantly teleport to 95 just to prevent the vaults from being stripped bare in an hour. The Silver Institute, which is usually very conservative, has confirmed that we are in our 6th consecutive year of a silver supply deficit. We are short 67 million ounces this year alone. That is the entire annual output of Mexico, the world's largest producer, just gone. It doesn't exist. You cannot print more silver. You can't pass a law to make the earth give it up faster. It takes 10 years to bring a new mine online. The supply is fixed, but the demand is exploding. Look at Samsung. They didn't just buy silver on the exchange. They went directly to a mining company in Canada and locked up 100% of their output for 2 years. A tech giant bypassed the entire global financial system to secure their supply. They are acting like it's a wartime economy. They are hoarding the raw materials because they know the market can no longer guarantee delivery. When the people who make your phones and televisions are scared of running out of silver, you should be terrified. And then there's the gold to silver ratio. This is the master key to understanding the silver price. Historically, the ratio has hovered around 15 or 20 to 1. A few weeks ago, it was at 65. Today, it's down to 59. Silver is outperforming gold on a percentage basis, and it's doing it consistently. If gold stays at 5,200 and the ratio merely reverts to its historical average of 15, silver would be over $340 an ounce. Even at a conservative ratio of 40, we are looking at $130. The compression of this ratio is the coiled spring that everyone in the silver community has been waiting for. It is finally uncoiling. The mainstream media will tell you this is a bubble. They will tell you that it's driven by meme stock traders or conspiracy theorists. They said the same thing when silver was at 20. They said it at 30, they said it at 30. Now we are at 88, and the fundamentals have never been stronger. A bubble is when price exceeds value. This is the opposite. The value of silver as an industrial necessity and a monetary haven is finally being recognized by a world that has run out of options. The risks are there, of course. I want to be balanced. There could be a temporary de-escalation in the trade war. There could be a rule change at the COMEX. They've done it before. They can raise margin requirements to force people out of their positions. They can change the rules to allow for cash settlement, effectively telling buyers they can't have their metal. But every time they use those band-aids, they destroy the credibility of the exchange. Every rule change is an admission of failure. It might cause a $5 or $10 dip, but it only makes the eventual explosion bigger. If you are holding physical metal, a $10 paper dip shouldn't move you. You aren't holding paper. You are holding the only thing that cannot be devalued by a tweet or a court ruling. We are watching a structural shift that only happens once every few generations. The last time we saw anything like this was the 1970s, but this is bigger. In the 70s, the world wasn't dependent on silver for solar energy. The world didn't have a globalized electronics industry that requires hundreds of millions of ounces a year. The debt wasn't $34 trillion. The geopolitical situation wasn't a hair-trigger trade war between the three largest economies on Earth. The setup today is far more explosive than anything the Hunt brothers ever dreamed of. Think about the psychology of the new money coming into this market. For decades, silver was the forgotten asset. It was poor man's gold. But at $100, the narrative flips. It becomes a momentum asset. The fund managers who ignored silver at $30 will be forced to buy it at $100 because their clients will demand it. They will see the chart, they will see the supply deficit, and they will pile in. That is how you get a parabolic move. We aren't even in the parabolic phase yet. We are still in the orderly climb phase. The panic hasn't even started. Tomorrow morning when the sun rises over Shanghai, the game changes. If that $96 scrap price is reflected in the futures open, the great divorce becomes official. The West will be forced to choose. Either let the price of silver rise to meet reality, or watch every single ounce of silver in London and New York disappear to the east. I don't think they have a choice. The math has taken over. I've spent months tracking these delivery notices, reading the trade agreements, and watching the vault levels. Everything I have seen confirms one thing. The system is out of time. You cannot run a deficit for 6 years and expect the price to stay suppressed. You cannot threaten your largest trading partners and expect your currency to remain the only safe haven. You cannot promise metal you don't have and expect the buyers to stay quiet forever. The threshold of $100 is more than just a number. It is a psychological barrier that, once broken, changes the global financial landscape. It validates everything we've been talking about on this channel. It proves that the fringe data was the only data that mattered. I want you to be ready for the volatility. Silver can move $5 in an hour. It can drop $10 in a day on a margin hike. But look at the destination, not the bumps in the road. The destination is a world where physical assets are the only things that matter. If you have silver, hold it. If you don't, understand that the window is closing. I'm not saying that to create FOMO. I'm saying it because the recyclers in China are already paying a premium that suggests the window is already shut in the East. We are just waiting for the West to realize it. I'll be here tomorrow morning to cover the Shanghai Open. It is going to be one of the most important trading sessions in the history of the silver market. If we see a gap up to 95 or 100, I will be going live immediately to break down the implications. You need to have your notifications on. I want to hear from you. What is your move? Are you buying the dips? Are you holding for triple digits? What do you think happens when the COMEX has to admit they can't fulfill the March deliveries? Drop a comment below. I read every single one, and your insights help me refine the research I bring to this channel. We are a community of truth tellers in a world of algorithms. Share this video with one person who still thinks the economy is strong. Show them the $96 scrap price. Show them the vault data. Let them see the math for themselves. The more people who understand what's coming, the better prepared we all are. We are entering the era of the great divorce. The paper is burning and the metal is rising from the ashes. It is a mathematical certainty. It is a historical inevitability. And it is happening right now. Stay sharp, stay disciplined, stay stacking. This is the hidden economy, and you are now part of the few who see it clearly. I will see you in the next one, hopefully as we celebrate the break of $100. The sheer scale of what is happening at the COMEX right now cannot be overstated. When we talk about 23 million ounces, it's easy for the human brain to just see a number on a screen. But visualize that. Imagine tens of thousands of 5,000-ounce bars being loaded onto armored trucks, leaving the vaults of JP Morgan and HSBC and heading into private storage. This isn't trading. This is an exodus. It is a vote of no confidence in the very exchanges these banks helped build. Why now? Why is the pace accelerating? Because the banks can see the calendar. They know that the March delivery month is the cliff. They are grabbing what they can while the official price is still under $90. They are the insiders. If the people who run the casino are cashing out their chips and taking the physical metal home, what does that tell you about the future of the casino? And look at the geopolitical layer. Trump's rage tweet wasn't just about tariffs. It was about the loss of control. The Supreme Court ruling essentially stripped the executive branch of its ability to unilaterally rewrite trade law under the guise of national security and the way they had planned. When a leader feels their power slipping away, they lash out. They double down. That much higher tariff and worse common is a declaration of economic war. In an economic war, the first casualty is the stability of the fiat currency. The second casualty is the just-in-time supply chain. If you are a manufacturer in Germany or France and you see this chaos, you realize that your entire business model buying raw materials from the global market and selling finished goods to the US is under threat. You start to pre-buy your inputs. You buy your copper, your nickel, and your silver now because you don't know if you'll even be allowed to trade for them next month. This pre-buying creates a feedback loop of surging demand and shrinking supply. This is why Samsung's move is so revolutionary. They didn't wait for the market to tell them what the price was. They realized the market was broken. By locking up a mine's entire output, they effectively removed themselves from the COMEX London system. They said, "We don't trust your paper promises. We're going to the source." If Apple follows suit, if Tesla follows suit, if the major solar players in China follow suit, there will be zero silver left for the investment market. Zero. The investment silver we buy as coins and bars is the leftovers of the industrial world. And right now, the industrial world is hungry. I want to go back to the gold-silver ratio for a moment because it's the most misunderstood metric in finance. People look at it and say, well, silver is just more volatile. No. The ratio is a measure of the world's risk appetite and its monetary reality. When the ratio is at 80 or 90, the world is asleep. It assumes silver is just a commodity. When the ratio starts to crash toward 50, 40, or 30, the world is waking up to the fact that silver is money. In every major monetary crisis in history, silver has outperformed gold. Why? Because the silver market is tiny compared to the gold market. It's like trying to fit the water from a fire hose into a teacup. When the big money realizes that gold is getting too expensive and they pivot to silver, the price doesn't just rise, it teleports. We are seeing that pivot happen in real time. The teacup is overflowing. The $96 scrap price in China is the canary in the coal mine. It is the first real crack in the global pricing structure. It tells us that the physical floor is much higher than the paper ceiling. Usually those two things stay close together through arbitrage. But when the arbitrage breaks, when you can't get the metal to move it from the cheap market to the expensive market, the system fails. China has the metal. They have the manufacturing. They have the recyclers paying $96. The West has the paper contracts and the empty vaults. It doesn't take a genius to figure out who wins that trade. I've been doing this for a long time, and I have never seen a setup this perfect. I've never seen the technicals, the fundamentals, the geopolitics, and the supply-demand math all scream buy at the same time. Usually, one of them is lagging. Usually the macro is good, but the charts look weak. Or the charts are great, but the physical market is flooded. Not today. Today, every single light on the dashboard is flashing red. The truth teller persona isn't just a style choice. It's a necessity. Because the mainstream persona is lying to you. They are telling you that inflation is cooling, that the trade war is manageable, and that silver is a volatile commodity. They are lying because their job is to keep you in the system. My job is to show you the exit. The exit is silver. The exit is gold. The exit is physical assets that no government can print and no bank can settle in cash. Tomorrow is the day. Shanghai reopens. The world watches. The Great Divorce moves into its next phase. I want you to be watching with me. Don't be distracted by the noise. Focus on the math, focus on the premiums, focus on the vaults. Everything else is just theater. If you've made it this far in the video, you are the reason I do this. You are the 1% who is actually paying attention. You aren't looking for a get-rich-quick scheme. You're looking for a don't-get-poor-slowly strategy. You understand that the world is changing, and you are taking steps to protect yourself and your family. I respect that. And I will continue to dig through the data, the Chinese scrap reports, the COMEX delivery notices, and the trade tweets to bring you the truth that the algorithm wants to hide. Let's beat the algorithm together. Like the video. Comment 96 if you understand the significance of that scrap price. It tells the system that we are paying attention. It tells the censors that this community knows the truth. Stay safe out there. The world is getting volatile, but volatility is just another word for opportunity if you're on the right side of the trade. We are on the right side of the trade. We are on the right side. I am your host, and this has been Analysis with AG. I will see you at the Shanghai Open. The math is on our side. The physical reality is on our side. The future is silver. It has begun. The doors are locking. Make sure you're already inside. Think about the solar industry for a moment. We are told that the world is going green. Every solar panel requires roughly 20 grams of silver. The new tail pecan panels, which are more efficient and are becoming the industry standard, require even more. China produces 80% of the world's solar panels. If they are paying $96 for scrap, it's because their solar industry is screaming for metal. They cannot meet their green energy targets without silver. This creates a price inelastic demand. A solar company doesn't care if silver is $50 or $100. They need the 20 grams to make the panel. If they don't have the silver, the factory stops. The workers go home. The contracts are breached. They will pay whatever it takes to keep the line moving. That is why the recycler can charge $96. That is why the premium exists. Now, multiply that by the electronics industry. Multiply it by the electric vehicle industry. Multiply it by the military-industrial complex, which uses silver in every missile, every satellite, and every high-tech communication device. We are fighting over a shrinking pie of metal that the entire modern world requires to function. And the pie is shrinking because the mines are exhausted. We spent 30 years high-grading the best silver mines in the world. The new discoveries are lower grade, deeper in the ground, and in more difficult jurisdictions. You can't just turn on more silver production. It's not a faucet. We are at the end of the road for silver suppression. For decades, the banks used the paper market to keep the price low, which discouraged mining and encouraged consumption. They created their own trap. By keeping the price artificially low, they ensured that a massive shortage would eventually develop. That shortage is here. The $96 scrap price is the first explosion. The $100 spot price will be the second. The default of a major exchange will be the third. I want you to be prepared for all of it. The mainstream will call it a black swan. It's not. It's a white swan. It was visible from miles away if you were looking at the data instead of the headlines. I've seen this pattern before in other markets, but never in one as vital as silver. This is the big one. This is the trade of a lifetime. But it's more than a trade. It's a transition. We are transitioning from a world of unlimited paper back to a world of limited physical. It's going to be painful for those who are unprepared. It's going to be transformative for those who are. I'll be here every step of the way. Again, thank you for being part of this channel. Subscribe if you haven't, like the video, and get ready. Tomorrow morning, the world finds out what silver is really worth. This is Analysis with AG. Stay stacking. The Great Divorce is here.